Hello, everybody. Welcome to Trading with Livevol. My name is Stefan Choi, and this is where I trade my Reg T account and my personal Reg T account, and I use LVX to do it. So the market's actually down quite a bit today, which is kind of good news. Not so much that it's down, but that there's actually some movement. So as you guys know, I've just been waiting for an opportunity to make a trade, and I feel like we're getting closer and closer. So the opportunity to make money, I think, is getting closer, which is either it's going to make another huge downward movement, or we're going to have a big old snapback, right? So right now it's still in no man's land, so it's not really something you can bet on. I talked to you guys about on yesterday how this candlestick right here could lead to going up or going down. I had somebody come and tell me like, hey, Steph, you're right. It went down. Just so you guys know, basically, if I thought it was really going to go down, I would have put some money down. So that's how sure I was that we're going to go down. So unless I put my money on it, I'm, whatever I say, that's about how much sure I am in terms of, my percentages of me being correct. But I think with this sell-off and with the dollar going higher, there is going to be an opportunity for a big old snapback or going down. One of the things that is, now normally I would have maybe put on a bearish trade before this, but the thing that is kind of preventing me from doing it is the fact that that the European markets are so strong. Sorry about that. That the European markets are so strong, and they're just outperforming us, and then they just went into QE. So it's one of those things where I'm trying to balance this out, trying to figure out what exactly the right move is, but this is kind of preventing me from just having a complete bearish bet. So the other one obviously is the US dollar. It is skyrocketing. I had something that's very interesting. So as you guys know, I'm long the calls in UUP at these Januaries, which is like a long term, and it's worked out great. I sold 200 shares against it to kind of try to take advantage and of like maybe it going down. Instead of going down, it actually made a new high. But you see how like this graph is starting to look hyperbolic. Like this angle is like at a trajectory that either it's going to go even higher, right, or it's going to have a massive sell-off. And I think maybe the massive sell-off, if it does happen, might be in conjunction with the market rallying, or like if you have a massive spike, basically, you'll have the market tank. It's just a idea, but I think that could possibly happen. So I'm long these calls, which are working out awesome. I wish I bought like 1,000 of them. But I did see something really cool today. So you see these trades. So this guy did about 46,000 of these March 27, 25 and a half puts, right? So basically when I see this trade, you see how it's like the market was 4 bid at 8, 6 bid at 7. You're not sure, what exactly is going on here. If you go to the options, you see it right here, 50,000 of these traded, there's only 112 open interest, right? You can click on this and you'll see all the trades that's happening. So this morning, right off the bat, it was 4 bid at 7, and everyone started just buying these for 7 cents, right? So even these 7 cents that you think was basically traded on the bid, that's not correct, because basically they lifted all the 7-cent offers and they now left a standing 7-cent bid. and then they printed these two large block trades for 7 cents. Most likely they were shopping this around the whole time upstairs, which is why all these traded for 7 cents. And then now they're trading even for 8. But UUP has gone up so much, they're actually trading for 6 cents now, right? So what does that mean? Well, this guy is buying 50,000. Either this trader is thinking that the dollar is going to tank, or he's hedging his position. Since I have this long call position right here, as soon as I saw this, I'm like, hey, this is a great way to hedge my position, right? So I only pay a nickel or 6 cents, and I can buy 10 of these to hedge my calls, right? That I paid 150 for, or, right? So the 24 is $2 in the money now, but basically I paid about 150, and I'm gonna give fraction of that to essentially lock it in for the next 3 weeks. So normally buying puts on this instance wouldn't have been that appealing to me, but because dollar is going doing this, like going out of the Bollinger Band and it's expanding, so it could do one of these things, right? So it could be outside the Bollinger Band, and then within, like, 2 weeks, it's gonna trade off like more than 5%, right, or something like that. Over here, you saw the same thing, right? Or it could be one of these things where it's here and it's gonna go higher, right? So like you could have said that about UUP here, here, and now here again. And I'm short stock, and I sold stock because I was thinking, hey, this isn't too bad way of scalping some UUP while I had the calls. But obviously I lost on these, but I don't care because I own 13 of the calls, right? So now I have a bid out on this one for a nickel. I think eventually I might pay 6 cents. Let me see if I can actually do this complex trade. So I'm gonna buy this 10 times. Bear with me, I didn't even think about it, but I was thinking maybe I'll do this. And I'm gonna buy 200 shares back for 202. All right, so that's, so I'll do it for 5 cents less. And then 3 cents. Okay, let's try it out. So basically what I'm gonna do is I'm gonna buy 10 puts for 5 cents, and then I'm gonna sell the stock out for 26.02. No, I'm gonna buy the stock back for 26.03. I'm gonna see if it works. Oh, done. So I got out of my stock, and I got these calls puts for 5 cents. So for those of you guys who are looking at this, see, I just bought this for 5 cents, although I paid 26.08, so that's not that good. Well, anyway, basically I bought this for 6 cents, and so now I have this protection 25.50 or lower, and I'm good for the next 3 weeks, because most likely it's either going to keep going higher by more than a nickel. That's my guess, or we're going to start going down, in which these 10 puts are going to start increasing in value and should help me. Most likely, when it does this kind of stuff, it's not just going to flatline at 26. It might actually either sell off or it's going to go higher. So basically, essentially, I'm doing it like a mini straddle. And the reason I'm buying this is because of all these puts that's already traded. So somebody actually did the analysis and came up with the idea. But since I'm already in the UUP, it's something that I'm basically piggybacking, even though trading UUP was on my own volition, right? So I'm using the options order flow to kind of help me manage my position instead of just doing it myself. So that's it on UUP. In terms of my trading today, I'm actually down. All this stuff is just marks. The only thing I'm really down is in Voya. I'm down $1,000 because the stock's down 95 cents. But I'm not really that concerned because I only have 3,000 total on it. And when I look at Voya in the past, it's gone down and up a few times. So even if it sells off, since I have like over a month left, these are April expiration, I most likely could rally back, right? So it could sell off, right? So like this whole sell-off happened like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. So like I could actually get back to here or somewhere around here, 24, 25, 26. Yeah, so somewhere around here could be where I could be. So even with this sell-off, you can actually make money. So right now, I don't want to do anything. I'm going to give this guy benefit of the doubt, even though my new strategy is not to hold these things. But I'm gonna let this one go. And even if it goes low, I'm not even going to really pay too much attention unless there's something specific that changes Voya's stock price. But I'm going to let it kind of bounce back. The other thing that kind of wanted to talk about is Greece. So I know Greece is a little bit in the news. My general thinking with Greece is that that they will be eventually they will not be part of the euro, right? Just because they have a debt that they can't pay back, right? So if you had a debt that you couldn't pay back, like a credit card debt that you couldn't pay back, no matter what, right? Then basically the only way you can do it is to start fresh, right? So declare bankruptcy, go back to their own currency, which is drachma, and then basically start new, right? Completely devalue the currency, get a fresh start, and then you'll have people who will reinvest in Greece just because they just went through bankruptcy. I don't think they can actually survive going the route that they're going because it's impossible to pay that debt, and they have to go through some drastic measures, and there's no way the citizens of Greece, in my opinion, are gonna endure that, right? Like they're like just firing people over there, cutting their retirement funds. You couldn't even raise like 5 cents a gallon in America to pay for the infrastructure costs. There's no way, like if people started taking away Social Security, if you actually had a government job and they just start arbitrarily laying off half of you and basically taking away all your benefit and retirement, believe me, there will be some hell to pay in America. And there's no way Americans would stand for any kind of austerity like that. So I just don't think that the Greek citizens will go for it. And eventually, if they stay on this route, they will be indentured servants to the Western Europe or the Northern European countries. And basically, they're just gonna they're just gonna leave. I think that's the only solution I see. For Germany, who is basically the euro, in my opinion, they I think for them it benefits Greece to stay because what are they giving them? Like some cash, and in return, the euro just gets decimated. So all the exports that Germany has is essentially, you know, essentially the lower euro is because of countries like Greece. If Germany was its own currency, basically it will be stronger than the US dollar. So, or much stronger than the euro. And they wouldn't be able to export. They wouldn't be, the companies will be in a tremendous bind, right? So in my opinion, it actually benefits Germany more to keep Greece in than vice versa. If I was Greece, I would just go like, I'm out of here, and basically declare bankruptcy and start fresh and start getting new money in the country. Stop having rich people in Greece basically take all their money out of the banks in Greece. Just have them come back, because if you declare bankruptcy, basically everything will be pretty cheap in Greece, and you'll be able to buy land, factories, and you can start over again. But anyway, that's my 2 cents worth. It's not, I don't know if I'm not a politician or anything or an analyst on that part, but I think in terms of trading, I am fully expecting Greece to leave. Not really sure how I'm going to take advantage of that in terms of trading, but I'm sure I'll figure it out. So for the summary, I think it's good that the market's actually moving. I'm not cheering that it's going down per se, because I would have made more money if it like ripped up, but it is what it is. Whatever I lost today, I think I can make more because the opportunity is coming. So I think for all of you guys who are also short-time traders or are looking to pick up some bucks here and there, this is kind of the time to buckle down and to keep a close eye on the marketplace, right? Because when it's like slow like this, it's like, yeah, you just buy a call or get long some stocks that have good fundamentals, and you can kind of ride it. But on these kind of movements, basically it doesn't matter what stock you have, it's gonna sell off, right? So, but it also provides a good opportunity that if the stock market recovers or goes even further down, you can make a ton, because these moves are gonna start increasing, right? So the bigger these candlesticks are, the greater your opportunity to make money. So I made all my money in the past, like basically a couple of months, because of these large movements, not because of these little movements. So so I'm kind of looking and paying attention, and I'm looking forward to putting on a bet. Obviously, one thing I want to make a note of, you can make a lot of money, but also means you can lose a ton of money, right? So your stops have to be extremely tight, I think, and you have to be extremely disciplined in terms of just cutting your losses, right? So you can actually have trades here, right, during these like volatile times where you can only win 1 out of the 4 trades, but that one trade will be so gigantic that will make up for the 3 little losses you had. So keep tuned. I'll let you guys know if I do anything. Right now, I'm just kind of looking at all the different stocks and indices. For me personal, I'm less likely right now to probably bet on individual stock because they can vary, and most likely if the market's moving this much, it probably on an index would be a better way and more secure way to make money if you were correct, right? So a lot of times I check all the spider sectors, right? So the consumer discretionaries here, you can see is falling. Basically, the staple has broken down, right? This is the industrial starting to break down. This is the material sector, broken down. Financials definitely broken down. Healthcare is actually hanging in there. The technology sector is at the bottom range. And then the utilities are basically riding down the Bollinger Band. So, you know, right now the market looks kind of dicey. The reason I'm just not jumping on the puts is, like I said, because of the QE in Europe. And in the past, you know, in the past 5 years, it's just been not that great of a strategy to short at these critical times, right? So when you think it's breaking, you start shorting and you just get crushed, right? So people got crushed here, here. They're less likely to just, you know, the bears have been basically beaten to a pulp. So it's going to take some time for the bears to really step on the gas. Like normally, if I saw a chart like this, I would be buying puts like crazy. Except in the past like 2-3 years, it hasn't really worked out as well, right? Look at like this week, this candlestick, this rallied back literally in a week, everything they lost, which was about 10%, which is incredible. Yeah, I think there's going to be some trading opportunities to make a ton of money. Stay tuned, and good luck trading today, and talk to you guys tomorrow. Take care.